Now we've seen some bullishness on cable. Now it traded to an old high and through it. It did it rather handsomely. And let's go down to a 15-minute chart, and we'll take a look at the cable on an intraday basis. Okay, so now we have a 15-minute time frame on cable, and I want to draw your attention to several things here. Number one, this is a rather sloppy, but still nonetheless a market maker sell model. The consolidation I see right here, okay, so it's a clear, obvious range, and yes, we had a drop down in here, but I'm looking at price action creating the consolidation, then the run out, it returns back to the range, reaccumulation, another area of accumulation, and it runs out, another area of accumulation, and makes the high, smart money reversal, low risk sell, redistribution, and then it trades back down to what? Right below the original consolidation. And this is this old daily high. Okay, so that old daily high, that's what that level is here, 135.48 for this particular data feed. And I want to draw in a couple things. I want to draw your attention to certain elements, and this is how I mark up the charts, and this is how I print them, and this is how I put them in my journal. We're going to take a look at the Fibonacci on a few things in here. I want you to take a look at this range here. Okay, and I'm going to introduce a concept that if you're new to me, this is going to be something neat. All right, so what we're looking at here is a measurement of the highest and lowest point of this consolidation. And what makes this a consolidation? It should be obvious when you look at price. When price is creating a box or a rectangle in consolidation and it leaves it, it'll be obvious many times after the fact. When you're new, over time, you'll see these formations and they create equilibrium. Okay, equilibrium is the midway point in here, so that's what I'm measuring. So I'm measuring the lowest low and the highest high. Now, usually you see me using the Fibonacci, placing it on the highest close or open near a swing high, or near its lowest close or open on a swing low. That's for entry purposes. Now, when we're looking at equilibrium, we're looking at the entire or total range. The total range is the highest high and the lowest low. So that element right here for equilibrium, that's going to be important. So we're going to draw a line on it. So we have our level here. I'm just going to just thin this up a little bit. So we're drawing a distinction between the old daily high here, and now we have an equilibrium measurement. So now we have two reference points that are important. We have an old daily high, which we're thinking maybe is a run above. They're building in this premium in or pumping it before they dump it above this daily high. We can also see the element of equal highs in here in another consolidation. We would expect to see a run above that. Here's the midnight candle, New York time. So this is the New York opening price. Again, it's not the New York session, it's the ICT New York open price. Okay, what we set for a trigger mechanism for buying and selling for the daily range for Power 3 concepts. So we have the opening price here, you extend that out across the day until around London close or so. And you can see the Judas swing here occurs. It rallies up, takes out equal highs, breaks down, comes right back. What's it retest? The opening price. Sells off, consolidates right ahead of the equilibrium price point of this range. Okay, and then slices through it aggressively and does not waste any time. Immediately guns for the liquidity resting below the consolidation over here, and for good measure, it runs out the low here. Just by a little bit, but any orders that are at that level or just below it, spread would get you. Okay, so we see the market go into consolidation again. We'll probably see it trade a little bit lower just for good measure. And I want to talk about a few elements to how you can project this low. Not that this isn't enough, because we can use the market maker sell model for specific price levels. But I want to draw your attention back to this consolidation here. And we can see that 135.52.5. If we draw a fib from the high, and again, now because we're working with equilibrium and ranges, you have to use the highest and the lowest price points. These are not entry points, okay? I used the highest opener close and the lowest opener close in a swing point for measuring my actual price entry points. That is not the same thing here. When we're using equilibrium reference points, you have to use the wicks. Now, if you're looking for entry price points, you want to be focusing on volume, where the most buying and selling is. Well, you're going to be measuring that with the bodies of the candles. We are not doing that here. Completely different animal altogether. So we're using the highest high, and we're going to drag it down. So what I'm looking for is the equilibrium price point level on the fib, which is this one right here. Keep your eye on that. I'm going to drag that down until it lines up with this blue line, and I'll explain it in a minute. Okay, so now what we have done, we've measured the high and projected all the way down until the equilibrium on the fib lays right on the equilibrium of this consolidation, so that we can get a measurement of market symmetry. Okay, so what you end up getting is the actual low of the day. It doesn't deviate by 1 pip. It doesn't deviate short of it. It goes right to it. These are the elements I like to see come the third week of January. Now, it will not always be this precise. It will not always give you this measure of symmetry around these couple days right after the holidays. It just so happens that the things were technically there today to warrant these types of deliveries. Now, there are elements in IPTA, which is the interbank price delivery algorithm, okay, which creates the high and low of the day. All these things are factored in mathematically, and they have an overlap with fib. I look for points of equilibrium. I look for the models to be there. Right now, we've outlined enough to justify why this market should have acted the way it did today. Now, I did not trade this particular pair. I was studying this one, but I wanted to participate in the euro dollar. So let's take a look over at the euro dollar now. All right, so the euro dollar, same premise we saw yesterday, a big run up in price. Okay, we're well above this old high here. And I knew in my gut that everyone would be expecting this high to be taken out. Wanting this run here, we had the high at 120.80.3, and then we have the high here at 120.91.1. Okay, so we fell short of it. Everyone else would have been expecting this market high to be taken out, not me. So what I was looking for, and this was what gave me the impulse to want to be a seller, what I'm measuring here now, because we're looking at entry points, now we have to look at this element of the open and the high and the low. In other words, what we're looking for is the lowest open or close and the highest open or close relative to the swings. What I'm measuring is the most volume, the actual buying and selling that's occurred by looking at the bodies, not the wicks, okay? Then what I do is I duplicate that range and I add it to the lowest open or close, again, over here during this retracement, and that gives me this high up here. And we saw that high be pierced yesterday. So I know we are really, really overbought, okay? We're overbought in relative terms to this high and this low. So if we are overbought from a purely technical standpoint, and there's an element of wanting to see that cable trade lower as well, I have two things going for me. Both cable wanting to suggest lower prices. Now, Eurodollar is in an area where it should look to sell off. I got a pretty good deal. So now what we're going to do is we're going to drop down into a 15-minute time frame for the Eurodollar and do some analysis on that as well. Okay, so we're looking at the Eurodollar. This is a 15-minute time frame. And I'm going to give you an idea what I acted on last night. And I did not want to stay up overnight. I didn't want to participate in London. I didn't want to do any of those procedures that would otherwise lend well to entries. What I did was measure the highest body and the lowest body reference point relative to the open or close. And that gives me an optimal trade entry right in here. Okay. And admittedly, I was acting on this swing high right here. So we had a lower high, and a lower high to the right of it. Okay. And then on this candle right here was my entry. Okay. So as price was going up, because I'm having to sell short when price is moving higher, that is a filter for me. I have to be a seller only when price is moving up. And I was using it as the middle of this order block. In other words, it was an up close candle. I was anticipating a breakdown. It just so happens that it traded up higher. My stop loss was 35 pips. Okay. Anyone that understands my Power 3 concept, I was using an early entry technique going in around the Asian Open, and with the expectation that we have already made the high the day before, so it should not trade through that. And if I'm allowing myself to have a 35 pip stop loss, I'm not concerned about anything. Okay, I'm just wanting to take some pips out. I will look to mitigate the risk in that stop loss around the New York Open. So we had price trade up, knock out this little swing high here, come back into a bearish order block, trades lower during the Asian range, comes back up. Here is the opening at midnight. So here's the New York opening price. We have our Judas swing here, rallies back up to what? 62% retracement level. Okay. Now, had I been up, I would have sold short right here. And then price breaks lower and ultimately reaches down into target 2. Now let's draw a line out. You can see how that overlaps rather handsomely right there. Hits it. Boom. If you are not paying attention to this over here, which is something that you shouldn't be doing if you're following my work, but you may have seen just this one. Again, because we're looking for entries, we're using the bodies, open highs or closes, the highest one, and or the lowest open or close in the swing low. Again, beautiful symmetry, 79% retracement level, kicks off the swing, trades lower.